Imagine a company betting big on an asset as volatile as a roller coaster. That's MicroStrategy, a software company turned Bitcoin whale. They've poured billions into the cryptocurrency, shaking up Wall Street's status quo. What's their game? They're betting Bitcoin is the future, and they're dragging Wall Street along for the ride. MicroStrategy made its name in business intelligence software, providing tools that help companies analyze data and make informed decisions. For years, they were known for their innovative solutions in the tech industry. But in 2020, they made a radical move that caught everyone by surprise. It wasn't just a minor adjustment or a new product launch. They decided to put their cash reserves into Bitcoin, a digital currency that was still considered highly volatile and speculative by many, not just a little but billions of dollars worth. This was a massive bet on the future of cryptocurrency. This wasn't just about diversifying their portfolio or hedging against traditional market risks. It was a strategic decision that signaled a shift in their corporate philosophy. It was a bold statement about the future of money and the role of digital assets in the global economy. They were essentially saying that Bitcoin was the future. Their CEO, Michael Saylor, became a vocal Bitcoin evangelist. He didn't just invest the company's money, he also invested his own personal wealth into Bitcoin. He argued that Bitcoin was a superior store of value compared to traditional assets like gold or bonds. He believed that Bitcoin's decentralized nature made it a safer and more reliable investment. He believed it was a hedge against inflation and a revolutionary technology that could change the financial landscape forever. This move by MicroStrategy was not just about making money, it was about making a statement. MicroStrategy's all-in approach raised eyebrows on Wall Street. Traditional investors scoffed. Analysts questioned their sanity. But Saylor was undeterred. He doubled down, taking out loans to buy even more Bitcoin. This audacious strategy made them a case study in risk and reward. Their bet wasn't entirely irrational. Bitcoin's price was soaring and some saw it as digital gold. But the cryptocurrency was also incredibly volatile, prone to wild swings. MicroStrategy was taking a huge gamble. Section 4. Wall Street's Reckoning: The Disruption of Tradition. MicroStrategy's Bitcoin play sent shockwaves through Wall Street. Here was a company using its balance sheet to bet on a digital asset, something unheard of in corporate America. It challenged the traditional notions of corporate treasury management and investment strategies. Their move forced Wall Street to pay attention to Bitcoin. Financial institutions that once dismissed it as a fad had to take it seriously. Some started offering Bitcoin-related services to their clients. Others began exploring their own investments in the cryptocurrency. Section 5. Real-world ripples: MicroStrategy's impact in action. MicroStrategy's bold move to invest heavily in Bitcoin sent shockwaves through the financial world. It wasn't just a headline, it was a game-changer. MicroStrategy's influence extended beyond Wall Street. Their decision to embrace Bitcoin as a primary treasury reserve asset was a pioneering step that caught the attention of many. Their actions legitimized Bitcoin in the eyes of other corporations. Tesla, Square, and other major companies soon followed suit, adding Bitcoin to their balance sheets. This was a significant endorsement for the cryptocurrency. The move by these influential companies created a domino effect. More and more corporations began to see Bitcoin not just as a speculative asset, but as a viable store of value. This sparked a wave of institutional adoption, pushing Bitcoin further into the mainstream. Financial institutions, which had been skeptical, started to reconsider their stance on digital currencies. Their bet also had a tangible impact on Bitcoin's price. As MicroStrategy and other companies made substantial purchases, the buying pressure increased significantly. Their massive purchases created buying pressure, driving up demand. This surge in demand led to a notable increase in Bitcoin's market value, making headlines around the world. This in turn attracted more investors, creating a positive feedback loop. As the price of Bitcoin rose, more individuals and institutions wanted to get in on the action, further driving up the price. MicroStrategy's actions became a self-fulfilling prophecy, at least in the short term. Their confidence in Bitcoin's potential helped to validate the cryptocurrency, encouraging widespread adoption and investment. Section 6. The future of finance, a new era of digital assets. MicroStrategy's story is still being written. The company has made headlines with its bold decision to invest heavily in Bitcoin, a move that has both intrigued and puzzled financial analysts. Their strategy is not just a gamble, it's a statement about the future of finance. Will their Bitcoin bet pay off in the long run? Only time will tell. The volatility of cryptocurrencies makes this a high-risk, high-reward scenario. Investors and market watchers are keenly observing every move, but one thing is certain: they've disrupted the status quo and forced Wall Street to confront the rise of digital assets. Traditional financial institutions can no longer ignore the impact of cryptocurrencies. Their actions raise a fundamental question: what is the future of money? As digital currencies gain traction, the very concept of money is being redefined. Will we see a world where digital and traditional currencies coexist? Or will one eventually dominate the other? Will Bitcoin and other cryptocurrencies replace traditional currencies? The adoption of Bitcoin in everyday transactions is growing, but it still faces significant hurdles, including regulatory challenges and public trust. Or will they coexist in a new financial ecosystem? A hybrid model could emerge, where digital assets complement rather than replace traditional money, offering more options for consumers and businesses alike. MicroStrategy's gamble could be a harbinger of things to come, a bold move that signals a shift in how we perceive and use money. Their investment strategy might inspire other companies to follow suit. A glimpse into a future where digital assets reign supreme. As we stand on the brink of this new era, the possibilities are both exciting and daunting. The financial landscape is evolving, and only time will reveal the true impact of these changes.